So I get a lot of questions about Form 1099-K, mostly around, what do I do when I receive it? What kind of triggers reporting requirements? And ultimately, what these numbers mean and how they get reported on the tax return. So I want to go over the form itself and as a sample return just to see how everything is kind of transferred over. So Form 1099-K, a lot of this is pretty straightforward, right? It's a payment card and third-party network transaction report. So if you're running a business and you have an account with, PayPal, this is PayPal, for example, or Stripe, or one of these other payment processing entities, so you use them to run your customer receipts or deposits through for payments for your services or products, you might get one of these. So what are the reporting thresholds? It's generally $20,000 or it's $20,000 and 200 or more transactions. So if you're running an e-commerce store and you do 100,000 in sales and you sold, let's say 450 unique transactions to customers, you're going to get one of these. And so what it does is it is designed to report the gross amount of payments that went through your account. So they give you a copy of this and they send it to the IRS. So it's very similar to a 1099 div or a 1099B or INT, all those variety of 1099 forms that people receive at the end of the year. And so this is pretty straightforward here. The filer, in this case, this is an example of a PayPal account. So this company, Sample Company Inc., uses PayPal to process their transactions. And so the gross amounts of payments are broken out by month, and then the total is up here in 1A, and then the number of payments, right? So this company obviously triggered the reporting thresholds. They had 1,926 payments and over $20,000 in gross payments. So here's a couple things to really highlight here that's important. This number in 1A is truly the gross amount of payments. It doesn't include the fees, and it doesn't include any returns or chargebacks. And that's really important because I see a lot of taxpayers report on their returns not the true gross amount, right? They report the net amount that was deposited into their account at the end of the year rather than the gross payment amount. So if we scroll down, I have a sample return here, page 1 for this corporation. Let me zoom in a bit. So this corporation, Sample Company Inc., uses the PayPal account. And so their gross receipts or sales, we're going to assume for this example, they only have the PayPal account, right? So 65,745, that was the gross payment amount reported in 1A and the 1099-K. And then returns and allowances down here. This is the number of the chargebacks, right? So the chargebacks that aren't reflected in that gross payment number, right? That's really important to remember is the payment settlement entity, PayPal or Stripe, whomever, they don't report the net amount. They report the gross amount. So, it's important that you do the same, right? So you should report the gross amount of payments and then separately report any returns or allowances. And so that's obviously, apart from it just being correct, it's also really important because the IRS is getting a little more sophisticated. Their computers and matching programs are flagging instances where taxpayers are not reporting the true gross amount, right? So if the IRS gets a 1099-K for $65,000 and you think the net amount that's being deposited into your account is the gross amount, you're gonna inadvertently report that net amount up here, and so the IRS program is going to cross-check what's on the 1099-K versus what's on your return, and if they see that discrepancy, they might send you a notice. I've seen quite a few of those, right, where companies are under-reporting their gross receipts, and then the IRS is looking at that third-party information they're getting from PayPal, Stripe, and others, and they're saying, "Wait a minute, what's going on here? Well, how come the gross receipts you're reporting are significantly lower than the information we're getting from these third-party merchants?" So, very important to make sure that you're reporting the gross amounts as appropriate, and this will help, alleviate or head off any kind of notices you might get from the IRS. Now, in this example, we're only using PayPal, but obviously a lot of companies use multiple providers, so you might have to consolidate a couple of those 1099K numbers up here to get a true, gross receipt number. Let's see what else is important. Oh, another thing that's really important is make sure the 1099K is actually reporting your company name and tax ID number. So the pay TIN up here, this is the tax ID number for the account owner, right? In effect. So Sample Company Inc.'s their TIN number, all nines here, just for example purposes, but it's really important that this is in your company name. What I see frequently is businesses will set up the merchant account in the individual name of the owner. And so all of these transactions are being reported under the individual's name and social security number. That's a huge disaster. Apart from it not being flowing into the company accounts, the other issue is all of this is being reported in the individual's tax ID number. So now when the individual files their 1040, the same issue I discussed previously with the matching program, the IRS is going to look at the 1099K reported under the individual's social security number and then cross-check that with what was reported on the tax return and say, hey, what gives? How come you've got $65,000 in gross payment transactions, but we don't see a Schedule C with all of this income reported? What's going on? You don't want to be in that position, right? So if you have a 1099K issued to you personally for your corporate account, you need to contact PayPal or whoever, update the account information, and try to get them to reissue this 1099K under your company name and EIN. If you don't do that, then you're looking at some potential issues if the IRS decides to look at the return and ask poke around and start asking questions like how come you've got all this income reported in your name personally, but it's not reflected on your personal tax return. So I think that those are the highlights. Those are the important things to remember. I mean, again, keep in mind that this is a true gross payment number, right? So this should be the gross payment amount that's being reported on top line, whether it's your 1120, 1065, if you've got an S corp or 1120s. Any returns, allowances, chargebacks, all of those are below 1A. And again, that's done because you want to obviously reflect the true amount of gross receipts you have for your company, but also you want to keep in mind that the IRS is getting a copy of this information. And so if they decide to look at the return and look at the third-party information that's reported, you want them to relatively easily be able to reconcile these top-line numbers so that they know that you're reporting all the income as you should be. So I think that covers it. Thank you for listening and watching, and would very much appreciate a like on the video, subscribe to the channel for more information, and I hope to see you again soon. Thank you.